Hi, the question we're going to have a look at today is the 2017 Higher Level Service Firm question. The first thing we're asked to do in this question is to prepare a statement of the company's reserves on the 1st of the 1st, 2016. To do this, we're going to have to get the assets and the liabilities at the start of the year. So, first of all, we're going to have to get the assets. So the first asset in the question is buildings, which are 600,000. Now, in bold, in the question, it says that there are 3 years accumulated depreciation up as far as the 1st of the 1st, 2016. So if buildings are 600,000 and the rate of depreciation, the question says for buildings is 2%, and we multiply that by 3 to get 3 years comes to 36,000. So the buildings of 600,000 minus the depreciation on buildings 36,000, which comes to 564,000. Similarly, equipment is 80,000 at the start of the year, and again there's 3 years depreciation, so 80,000 by 20%, which is the rate of depreciation on equipment, by 3 years gives me 48,000. So 80,000 minus 48 is 32,000 is what equipment is worth. And furniture, again in the question, furniture at the start of the question, the first is 40,000, and I have to take away the depreciation, which is again at 20%, so 40,000 by 20% by 3 for 3 years gives me 24,000. So furniture is 40,000 minus 24,000. The other questions, the other figures I was left in the question. So stock of shop in the question, and all of these again are taken from the top of the question and at the first. The stock of shop is 5,000. Stock of oil is 1,800. Contract cleaning prepaid is 200. And again, that's an asset because we've overpaid for it. We don't have to pay it again. Investment income due is 300. And again, that's coming from the top of the question. The investments. Now, we're not told how much the investments are. We're going to have to work this out. So, in receipts, we received 3,000 investment income for the year. There's no investment income due at the end of the year, but there is investment income due of 300 at the start of the year. So, of that 3,000, 300 must have related to the previous year. So, 2,700 is for this year. Now that 2,700 is 3% because in your receipts you can see that 3% investments. So to get my investments for the year, if I get this year's investments, which is 2,700, divide by 3 and multiply it by 100, it gives me investments of 90,000. And again, that's not directly from the question, we have to work this out. My cash or bank balance, again, you can see from the receipts and payments account that the bank balance at the start of the year and the 1st of the 1st was 59,500. Now that's on the debit side, which means it's an asset, so 59,500 goes here in assets. If it was on the credit side, it would be a liability at the start of the year. So down to my liabilities. The first liability I have again, which is from the question, top of the question is creditors for supplies is €2,000. The next liability are members' fees prepaid in advance, which again is from the top of the question, which is 3,000. These are members who have overpaid us, and I suppose we owe them back membership. That's why it's a liability. The loan we have to work out. In the payments, it says there was a bank loan plus 15 months interest at 4% per annum on the 1st of the 4th, 2016. So the interest rate is 4% per annum, which is 12 months. So to work out what the rate is for 15 months, if I get my 4%, divide by 12, multiply by 15, for the 15 months the interest would have been 5%. So that 63,000 is the initial loan plus the interest of 5%. So the 63,000 effectively is 105%. So to get the initial loan, if I get my 63,000, divide by 105 and multiply by 100, the loan was 60,000. Now, to work out the amount of interest up to the start of the year, it was paid back on the 1st of the 4th, 2016. So of the 15 months, 3 months were for this year, so the other 12 were before this year, and that's what we're concerned with here. So to work that out, I get my 3,000, divide by 15 and multiply by 12. Sorry, divide by 15 and multiply by 12, and that comes to 2,400. And then the last thing I just had to put here, my liabilities, is the issued share capital, which again is coming from the top of the question. So that's part A done, to work out the statement of the company's reserves on the first of the first. Part B then of the question, and again the majority of these figures were coming from up here apart from the ones we had to work out. Part B of the question then asks us to calculate the profit or loss for the shop, just for the shop, for the year ended 31st of the 12th, 2016. So to do that, I'm going to have to do a little profit and loss account for the shop. So the first thing that will go in here are my shop sales. So from the question, if I look in the receipts and payments, I can see shop receipts of 85,000. So my shop receipts are 85,000. Then I have to take away my cost of sales. So my opening stock of shop, I will get from the very top of the question, which is 5,000 euro. Then I add my purchases for the shop, which is coming from the payments. So if I go to the payments side of the receipts and payments account, I can see purchases shop of 38,600. 36,800 goes there. And then I have to take away the closing stock of the shop, which I will get in adjustment 1 to the notes, which is 1,800 euro. Which leaves me with a cost of sales of 1,800 and a gross profit of 43,200. Then I have to take away the expenses that are attributable to the shop. For this, I will go to my notes. If I go to note VI, I will see that the light and heat for the shop is 300 euro. These are all coming from part VI, part 6. So the light and heat for the shop is 300 euro. Insurance for the shop is 850. Telephone for the shop is 400. And for the wages and salaries, in note VI, it says the wages and salaries in the 24 grand per annum paid to the secretary who also runs the shop. It's estimated 60% of this salary was for the shop. So 24,000 by 60% gives me 15,900 for my expenses, which leaves me a profit for the shop of 27,250. The next thing I need to do is C of the question asks us to prepare a profit and loss account for the year ended 31st of the 12th, 2016. So the first thing I'm going to have to do out here is to work out my income. Okay, so for income, the first thing I'm going to do is take the profit from the shop, which I have worked out above, which is 27,250. I'm also going to have interest from my investments. So my investments were 90,000. The rate of interest was 3%. So this year I should get 2,700. The profit on disposal of furniture I'm going to do a working on. Okay, so down in note 5 here, I will see that the cost of the furniture. So in the receipts side of the question, I can see that the cost of the furniture was 20,000. The depreciation, it says in the question in note 8 VIII, it says the furniture held at the end of the year is depreciated 20% and no depreciation is charged on furniture in the year of disposal. So even if it was sold during the year, it's only the 3 years depreciation that we take into account when working out the profit. So if it cost 20,000 and the depreciation was 12,000, that furniture is worth 8,000. It says that we received 10,000, so the profit is 2,000. So if I go back here, my profit is 2,000. Members' fees. I also need to do a note on members' fees. So if I go back to my notes here, and again, when we're doing these notes, there's a couple of things that are important to remember. At the end of the year, you add things that are due and take away things that are prepaid. At the start of the year, it's opposite. You take away things that are due and add things that are prepaid, like expenses and income. With stock, you're always adding opening stock and taking away closing stock. And with debtors and creditors, you add debtors and creditors at the end and take away at the start. And this is something you could maybe write down even at the start of the exam before you start the questions, because this will help you in lots of questions. With the members' fees, the amount we received is 270,000, and that's in the receipts part of the question. There were members' fees prepaid at the start of the year, which in the top of the question, members' fees paid in advance were 3,000. And again, here we can see that at the start of the year, stuff that's prepaid is added on. There's members' fees due at the end of the year of 2,700, which we can see from part III, or part 3 of the question. And again, if they're due at the end of the year, they're added on. And there are members' fees prepaid at the end of the year, which again is from part 3 of the notes of 4,200. And because they're prepaid at the end of the year, they are taken away. So in total, my members' fees come to 271,500. So I'm going to fill that in here, 271,500, and that is my income done. My expenses then. The first expense I'm going to have is wages and salaries. So I can see from the payments, wages and salaries are 83,000. Above, we worked out that some of that was attributed to the shop. So 14,400 of that was for the shop. So I take that away because I don't want to put it in twice. So I'm taking away the 14,400. And in note fee, it says the payment for laundry includes 2,700 for 3 weeks' wages paid to a replacement fitness instructor. Provide for a further 2 weeks' wages due. So the 2,700 was for 3 weeks, and there's a further 2 weeks due, which will make 5 weeks in total. So to see what the 5 weeks should work out to be, I get my 2,700 divided by 3 will give me 1 week, and multiplied by 5 will give me the 5 weeks. And that has to be added to wages, because that should be included in wages. So my wages is the 83,000 from the payments minus the shop wages of 14,400 plus the wages due of 4,500. Insurance from the payments is 7,200, and again I just take away the bit that was attributed to the shop of 850. Light and heat, I'm going to have to look and add the notes for. We need some workings for light and heat. The amount paid in payments for light and heat is 5,600. There's opening stock of oil at the top of the question, which goes in light and heat, and this was 1,800. And again, opening stock we're going to add on. Electricity due, there was none in this question, but sometimes there are, so I just left that there and left it blank. Closing stock of oil, which I get from note 1 of the accounts, is €400, and again I take away closing stock. And those 300 of light and heat was attributable to the shop, so that has to be taken away also, which leaves me with 6,700 is my total light and heat. Purchase of supplies, again I'm going to do a note on, look at the notes. So purchase of supplies is 43,200 from the payments. Again, for debtors and creditors up here, we said we add them at the end and take away the start. And again, purchases go with creditors. So my creditors for supplies at the end is 3,600, which I can get from note 7. And the creditors for supplies, the start of 2,000, I will get at the top of the question. So I add at the end and take away the start, which leaves my total purchases are 44,800. Bank charges are coming directly from the question or the notes. Yeah, note 4 says bank charges are €110. Loan interest. So the loan interest was 3,000, and that was for 15 months. So I just have to work out this year's loan interest to 3 months. So it'll be 3,000 divided by 15 multiplied by 12, which is 2,000. Sorry, divided by 15. We already worked out the 12 above, so 3 months, which is 600. Laundry in the payments is 11,600, but I have to take away the wages that were incorrectly included there. I'll take them from here, and I already put them in wages. So my laundry is going to be 11,600 minus 2,700. Telephone and broadband is 1,700 in the question, in the payments, and then I'm going to take away the €400 that was attributable to this shop in note 6. So it's €1,700 minus 400. Depreciation of buildings. Okay, so with the depreciation of buildings, in note 8 it says buildings and grounds 2% of cost from the date of purchase. So the buildings we had at the start of the year, the 600,000 were depreciated for the full year. So it'll be 600,000 by 2%, which is the depreciation rate for buildings. Then the buildings we bought during the year also have to be depreciated. So in the payments, the buildings we bought during the year were 150,000. And again, they will be depreciated by 2%. But we did not have them for the full year. We only had them for 9 out of the 12 months because they were purchased on the 1st to the 4th. So I multiply that by 9 over 12, which gives me 14,250. The next thing I have to do is to get the depreciation of equipment. The depreciation of equipment is 80,000 because we didn't buy or sell any equipment during the year. So it's just 80,000 by 20%. And the depreciation of furniture, again, furniture was 40,000 at the start of the year. We bought furniture during the year and the payments of 12,000, which would be 52. And then we sold furniture which costs 20, which brings us down to 32,000. And again, that's depreciated by 20%. Contract cleaning for the year, we're going to have a look at the note on that because there's a bit of a workings there. So this is note 6, contract cleaning. So contract cleaning and payments is 8,300. We're going to add contract cleaning prepaid at the start, which we'll get from the top of the question of 200 because you add prepaid at the start. And we're going to take away contract cleaning prepaid at the end of €600, which we will get from note II or note 2 to the accounts. So the contract cleaning in total comes to 7,900. So that leaves me with a profit for the year of 117,040, and I'm going to add the reserves at the 1st of the 1st, which I worked out in part A of the question, of 351,400, which gives me 468,440, and that is my profit for the year. The next thing we have to do, we're asked to do, is prepare the balance sheet. So part D is the balance sheet. So the first thing we're going to do in the balance sheet are our fixed assets. So for the fixed assets, buildings, at the start of the year we had buildings of 600,000, and then we purchased an adjacent building for 150,000. So in total my buildings are 750,000. For my accumulated depreciation, I'm going to get my depreciation of buildings at the start of the year, which I worked out in part A of 36,000 for the first 3 years. And I'm going to add in this year's depreciation of buildings, which is 14,250. So that will give me an accumulated depreciation of 50,250. For equipment cost at the start of the year of equipment was 80,000. We didn't buy or sell any equipment, so it's still 80,000. And the depreciation of equipment at the start of the year from part A, it was 48,000 for the first 3 years, and then this year's depreciation of equipment is 16,000. So my accumulated depreciation is 64,000. For the furniture at the start of the year was 40,000. I bought furniture which cost 12,000, and I sold furniture which cost 20,000. So my furniture is 32,000. At the start of the year, the depreciation of furniture for the first 3 years is 24,000 from part A. I'm going to add this year's depreciation of furniture of 6,400, and I'm going to take away the depreciation of the furniture that we sold of 12,000 because we don't have that furniture anymore, so we have to take out the depreciation. and we worked that out in the note earlier when we worked out the profit and loss of furniture. So in total, the accumulated depreciation of furniture is 18,400. My investments I worked out earlier of 90,000. They haven't changed. I haven't bought or sold any investments, so they're going to stay at 90,000. Next, I'm going to have a look at my current assets. My first current asset is just the closing stock of the shop, which I will get from note 1 of the question, €1,800. The second current asset I'm going to have is my closing stock of heating oil, which again I'm going to get from note 1, which is €400. Bank. In the question, we can see that the bank balance here at the end is a credit balance. So when that comes down at the start of the next month, it's going to be brought down as a debit balance over here, which will be an asset. So my bank is an asset of 3,300. At the end of the year, there is there's actually more adjustments to the bank, because in note IV, it says the closing bank figure does not take into account bank charges of €110 and a dishonoured cheque 900 received from a member in respect of fees. Okay, so I have to take account of those. So the €3,300, but that doesn't take account of bank charges of 950, and then a dishonoured cheque of 950, both of which will reduce our balance, leaving my bank at, I should have taken minus 950 minus 110, which leaves my bank at 2240. Cleaning prepaid. For the contract cleaning prepaid, at the end of the year I've overpaid an expense, which is good. I don't have to pay it again, so that's an asset, and I can see from note 2 of the question that's €600. And member fees due. These are members that owe us money at the end of the year, which will also be an asset. And I can see from the question, from note 3, there's member fees due of 2,700 added to the member fees of 950 for the dishonoured cheque. They owe us that again now. So in total, member fees due will be 3,650. Which gives me total current assets of 8,690. Now, liabilities, current liabilities are creditors' amounts due within 1 year. The first thing I have here are wages due, which we worked out earlier. These are the 2 months. And we said the total, so this is coming from part V, we worked out already. The 2,700 was for 3 weeks. So for the total of the 5 weeks was 4,500. So the 2 weeks that were due then is the difference between 4,500 minus the 2,700, which is 1,800. Member advance deposit. These are members that have paid us in advance, and I suppose we owe them back the membership. That's why these are liabilities. And these come to 4,200, and we just get that from note 3 of the accounts, 4,200. And the creditors for supplies, creditors are always a liability, and the creditors for supplies at the end of the year comes from note 7 to the accounts, 3,600. And I'd probably be better moving those here, and then total that there, they come to 9,600. So here my current assets minus my creditors amount due within 1 year, my working capital is minus 910. So that leaves me with a total net assets of 8,18400. Nearly finished the balance sheet now. We just have to do the small bit at the end. So the ordinary shares, we have to put in our authorised and our issued share capital. We'll get those from the top of the question. The authorised share capital is 500,000 and the issued share capital is 350,000. The balance from the profit and loss account I will get from part C of the question, which is 468,440. which is just this figure here, the total of Part C, 468,440. And I add these together, this gives me my capital employed of 818,440, so my balance sheet as balanced. The final part of this question is a small bit of theory. It says FitPro Fitness Centre Limited have decided, if I go back to the question here, FitPro Fitness Centre have decided to purchase and install new gym equipment. They have received a quote of 225,000. Can FitPro Fitness Centre Limited afford this investment? Explain your answer. So FitPro Fitness Limited can afford the new gym equipment. It can finance the cost of the 220,000 they need by selling the investments and receive 90,000. So they have 90,000 investments they could sell, and issuing extraordinary shares and collect 135,000. So if they needed the extra 135 to get them to the 225, they could sell more shares. Because at the top of the question, the authorised share capital is 500,000. They've only issued 350,000, so there's another 150,000 they could issue. And they're saying here they could issue all of those shares and then just sell 75,000 of the investments instead of the 90. Either of those ways will get them to 225,000. Also, the company has just repaid a loan, including interest, 63,000. So we can see there from the payments that they've repaid the loan and the interest of 63,000. And they also spent a net 152,000 on fixed assets. That's between the extra buildings and the furniture, both of which are non-recurring nature. So next year they won't have to buy those, so they'll have more money in the company. The company made a profit this year of 117,040 and has cash in the bank of 2,240. So the company has no need to borrow to fund the project, which will eliminate interest payments and result in higher future profits. So the company should be well able to install a new gym equipment of 225,000 if they decide to. That's all for today. Thank you very much.